Hello, my name is Belinda Thomas and I lead the Sales and Investor Relations team at Triple Point. Triple Point was founded back in 2004 and we're 90 members strong. We're an investment-led organisation, by which I mean we're approached by lots of companies who want to have funding for their business. We take them through our stringent due diligence process, and those which are successful, we then look at which products are most suitable for that investment opportunity. We're very proud to invest assets for private individuals, institutions, and also we have a government mandate. We have 4 key investment areas. We have venture capital, which we do within EIS and VCT. We have energy and infrastructure, which is also within our historic EIS and VCT assets, but is also part of our government mandate. We also have real estate investments, which we do within our social housing REIT. And last but by no means least is debt, which for us is leasing and lending and is the backbone of our IHT proposition. An area which we started back in 2006, and we have a 100% success rate in achieving business relief for eligible investors. We have 2 estate planning options, one for corporates, which is the estate planning partnership, and the one that I'm going to focus on today, which is the estate planning service. Within the estate planning service, it's a single application form. Through that single application form, your clients can gain access to TP Leasing Limited, which is a leasing, lending and infrastructure business, and also Navigator Trading Limited, again a leasing and lending business, but focusing on SMEs. TP Leasing Limited is looking for returns of between 1.5% and 2.5% per annum. Navigator Trading Limited is looking for higher returns, 4 to 6% per annum. Because you can blend the 2 together, if you did a 50-50 blend, it would then be a target return of 3.5%. So when we first started doing business relief investing back in 2006, we looked at a bond or a gilt. Here you have an investor loaning an asset, paying money to the government if it's a gilt, and there you have a strong counterparty. In return for that gilt contract, what they get access to is a contracted series of cash flows at an agreed rate of interest. Now this doesn't work for business relief, but if you look at the constructs of a lease or loan, then it's very similar in terms of the cash flows. Again, you have your investor loaning an asset, but the asset, instead of being money, would be a dustbin truck, an ambulance, or a credit card terminal. Again, it's going to the government or the private sector, so it's going to a strong counterparty. But again, that lease or loan contract gives you the right to a series of cash flows at an agreed rate of interest. And this in a trading business then is eligible for business relief. We find that it's very easy to talk to clients about what our investments are doing if you look at the modern high street. Everything on this slide links back to either TP Leasing Limited or Navigator Trading Limited. Within TP Leasing Limited, the generation strategy, again, it's doing that leasing and lending and infrastructure finance, but it's doing that with the public sector and corporates. It's looking for those returns of 1.5% to 2.5% per annum. And it does it through things to assets like street sweepers, assisted living, and also gym equipment. A snapshot of TP Leasing Limited as at the end of November shows you that at that point we had a smaller proportion, 2%, in housing association assets. These are properties which are paid for by housing associations directly from the government, and they pay for tenants who are the more vulnerable members of society to live in. We like that area of the business because it has a really strong counterparty. It has the government which is backing it up. We had a 15% allocation to central and local government. Here it's big ticket items that our local authorities need to be able to deliver the services that we all expect in our daily lives. Dustbin trucks, street sweepers. The NHS, similarly, we had a 25% allocation. So you can see it's a core part of TP Leasing Limited, having those strong counterparties of being the public sector. Within the NHS, we've got the ambulances, X-ray equipment, fetal monitors, MRI scanners, things like that. TP Leasing Limited also has 39% to corporates. These are leasing and loans to corporate entities. We have 10% in infrastructure, which for us is normally not renewable energy, but it is more on the lines of combined heat and power or electricity generation from non-renewable sources. Here what we're looking for is a strong counterparty and those consistent regular cash flows. That's what we're coming back to with TP Leasing Limited continually, is that we want to have quarter-on-quarter positive performance returns. We also have a 9% allocation to the SME sector. It has a slightly higher return profile, but we have a really broad investment base there to make sure you're still getting that consistency of returns. For TP Leasing Limited, it's not just the type of assets and the strong counterparties we're looking for. We're looking to make sure that it's diversified by geography as well, so we have assets throughout the UK. And also the maturity dates of those leases and loans are important. You don't want all of them ending at the same period. You want them structured throughout time. Since inception, it's generated a return of 2% per annum, which is exactly halfway in between its target return of 1.5% and 2.5%. Now, at the beginning, I said that we've been doing business relief investing since 2006. The entity that we did this in is a private partnership, but it is managed by the same team that managed TP Leasing Limited, and it has the same investment mandate. If you look at that performance, you're looking at that brown line, which is a consistent quarter-on-quarter positive performance. Very little volatility, which is exactly why we like this trade. Here, we've parried it against the FTSE 100 total return and also the AIM All Share. And as you can see, it has a lack of correlation to those indices, and it is very steady, consistent returns. Turning now to Navigator Trading Limited, again, if we go back to that modern high street, again, Navigator Trading Limited, leasing and lending, but focusing on SMEs. And what we're doing here is trying to provide assets and funding to businesses so that they can grow, whether that's through management buyouts or buy-ins, or providing additional working capital for their businesses. If you look at a snapshot of Navigator Trading Limited as at the 30th of November, then we have just over half in SME lending. For us, that's split into two different trades. We have senior debt finance. Now, this is where we gain a deep understanding of a company and we provide them with capital, taking security over all of the assets of that business. We have short-term working capital loans. Here, it's really akin to an overdraft facility. So it's a small amount of money and for a short length of time. Here, typically less than £10,000 and for under 3 months. We also have SME leasing. Here it's leasing things like credit card terminals. Again, we're looking for business critical assets or service critical assets so that we can be convinced and certain and confident that these assets can be paid for. In terms of a credit card terminal, what a small and growing business needs is to make sure that they're paid for the products and services they're providing. And that's why we really like lending against that type of an asset. We also have corporate trade finance. It's a relatively small part of the portfolio, but here it's providing funding for a very short length of time, typically up to about 60 days. And finally, a quarter of the business is within secured funding. For us, that's property-backed bridging finance, whether it's development loans or whether it's loans against a residential or commercial property. Again, short term, they're just bridging loans, typically 12 to 18 months. Navigator is incredibly well diversified. It's spread across the UK and it has over 60,000 different underlying customers. So they're spread throughout all of the different industries and sectors within the UK. The track record of Navigator, again, is very strong and consistent. Exactly what you're looking for from a leasing and lending business. It's looking for those returns of between 4 and 6% per annum. And since inception, back in 2013, it's provided a return of 5.3%. Our estate planning service, the charges, we split into two different parts. We have the one-off charges, which is an initial fee of 2.5%, and there's an exit charge as well of 1%. We also have a performance fee, which is 20% above a compound 5% per annum return, but that's only on the Navigator strategy. We have a deferred annual management charge of 1.5%. It's deferred until your client has received that minimum target return, whether that's 4% for the Navigator strategy or 1.5% for TP Leasing Limited. In terms of the corporate running costs of each business, Triple Point caps them at 1%, so if they were to rise over that amount, Triple Point would bear that cost. We have weekly share allotments for the estate planning service, so it's not long for your client to wait to get that business relief clock started. And in terms of exits, we can either have them on a 6-monthly basis, annual, or of course ad hoc withdrawals. And we target them to be facilitated within 3 months. When we do a withdrawal, we try as far as possible to make sure it's a matched bargain, which means it should be chargeable to capital gains tax in your client's estate. The minimum investment is £50,000. And we have a new feature, or rather a relatively new feature, which we put in back in last year, which is the ability for executors to approach us before probate's granted in order to use some of the funds from the service to be able to pay the probate bill. So if there are 3 things I hope you remember about TripPoint, it's that we're a really experienced and safe pair of hands. We have over 12 years of providing secure, steady, uncorrelated returns through our distinct leasing and lending strategy. We've consistently achieved our target returns, always looking for that quarter-on-quarter positive growth. And finally, that this distinct trade is a diversifier to your client's current holdings. Leasing and lending can fit in really well against a client's existing holdings of equities, bonds and cash. If you have any questions whatsoever, then please do get in touch with us. Our email address is contact@tripplepoint.co.uk, or else you can call our sales line, which is 0207 201 8990. Thank you.